Many spruikers might try to tell you that property investing is low risk, but this isn't true. All investing carries risk, and property no less than other investments. There's the market risk that the sector won't do as well as other investing sectors, the specific risk that the property chosen won't do as well as other properties may do, and of course the pure risk that investing anywhere isn't as good as keeping your money in a jar in the kitchen. To help you to decide if it's a risk worth taking, let's take a look at some of the more common risks that people worry about when they do buy property. If we considered the property market in Australia as one market, then this is a question that I would have to answer with a yes. If we combined the value of all property in Australia today, the value of them may indeed be lower than a year ago. This is true largely due to the recent Sydney boom, and Sydney's a large market. We saw frenzied buying and prices paid way over the true value of those properties. Now, as we come to the end of this, we can expect a period of adjustment in that market. But just like the highest rung in the ladder has the greatest height to fall from and the greatest chance of pain when you do fall, so it goes that property at the peak of their market, if that market becomes overheated, has the greatest chance of a fall. And because of the high values of these properties, their value decreases will provide a big impact to the overall reading and in fact skew the results. Having said this, at the present moment, we're seeing a ramp up of confidence and interest in many other markets. Many show a severe undersupply of housing and more people pouring into the rental markets than we've had for many years. I expect upward movements in these markets for some years to come, and that properties in some of the lower price ranges in highly populated areas will do well. The debate has long raged about which has the better long-term outcome, shares or property. I don't know which one will ultimately perform better over the long term, but I do know that it's important that whatever asset you choose, you become educated about it first. In the share market or the property market, you can suffer if you buy a poorly performing asset, buy at the wrong time or in the wrong market. On the other hand, you can certainly go a long way to ensuring that whatever asset you choose, it will perform well if you stick to the fundamentals and learn how to research before you buy. If you keep your money or the equity in your property uninvested, then you do have a guarantee. The guarantee that you'll lose nothing, but that you'll also gain nothing. If you instead choose to invest now and improve the potential outcome of that property investing by learning how to pick markets most likely to either grow or at least withstand any economic turmoil, then you can only do the same or better than you would have if you hadn't invested at all. Investing does carry risk, but don't think that if you don't invest that you're avoiding risk. There is, in my opinion, just as big a risk doing nothing as there is taking the chance and investing carefully.